Sasha, you're on. So that you know you're on. So yeah, the beginning just started and it's on you. So just bring on your guests.
There was no intro, no?
Your intro started. I played the intro.
I never heard it.
I
Hmm.
can play it again. We can start back. I'll play it again. But yeah,
Okay.
the intro played.
Yeah.
Good.
Thank you.
No problem.
Hello, ladies and gentlemen. My name is Sasha Star. It's Modern Investing on Pod TV. And although I never heard intro, I hope maybe you heard it. So, nevertheless, our guests today are Dr. Milan Sambarak. Welcome to the show, Milan.
Delighted to be here. Thank you for inviting me.
Great to have you. And Jim Eid from Eid Foundation. Welcome to the show, Jim.
Thank you, Sasha. Hi, Milan.
Great to have you. Okay, so today's Wednesday. All markets are up as usual, as it should be on Wednesday. And so, Jim? How is your portfolio doing these days?
Well, I'm very happy, but a little bit puzzled about what's going on. I'm just checking mine, and I see mostly green, so that's very
That's good.
reassuring. And I know Milan's going to be very happy that the S&P is almost at 500. And I've
Mhm.
told you before, back in the 90s, I thought when the Nasdaq hit 5,000, I would be, I would be comfortable after that. And now the S&P might hit 5,000. So I don't know what's beyond comfortable, but that's me now. And I just think that the Fed has to start lowering interest rates. I'm not sure why they're not. I think they artificially propped them up. The economy was not overheated, which is the traditional way of handling inflation by raising interest rates. But the inflation was caused by the COVID pandemic, and it was global in nature. It wasn't just the United States. So I think the Fed needs to get out of the way. It's trying to cause an artificial recession, and but the jobs are still being added, and the wages are still going up, and corporates are making record earnings. So there's nothing wrong with the economy, and I hope the Fed backs off. The Fed just has to start lowering interest rates
What
because
about what about the size of the national debt? Is that a concern?
of course, that's a terrible problem for the United States, other countries as well, but the United States in particular. The United States can always just print more money, but that's inflationary. But the part about the Fed lowering the interest rates is that one of the things that we have right now is prices went up during inflation, and the corporations have no incentive of lowering them. So people still are paying more than they did in 2020 before the COVID pandemic. And that won't change until you have competition. And unless the Fed lowers interest rates, small businesses won't be able to start and compete because it's too punitive right now at these rates. So lower the interest rates, allow small businessmen to get started and compete, and we'll see the prices of goods come down.
Um, I may think that there is something more or less political in a reluctance of Fed to lower interest rates. There
I'm
must
afraid you're right.
some political considerations. But I don't know if they're trying to help Biden or maybe his opponent on the election. That's unclear because if they don't lower interest rate now, first of all, it's very very bad for the debt of the United States because the maintenance of interest payments is long, $1 trillion a year or so. So if they will lower interest rates, they will definitely help the economy, the stock market, the service of debt. Uh, but they cannot stay with this race for long. I mean, it defies all the economic considerations. So
I
it's
think you can put your finger on it, Sasha. I think Trump wants the interest rates to continue to be high so that they can talk about inflation as being a problem and caused by Biden. That's so that they think that lowering interest rates would help Biden because it would boost the economy. It would be good for the average American. So, these are the types of things that the Trump party, which is right now the Republican Party, doesn't want to have happen. We see this with the mess over the immigration border. They resisted that. They don't want solutions. They want chaos so that they can get their doctor.
yeah, but you said correctly that it's a Trump party. It's not Republican Party. It is a Trump party, and I don't understand how they want to resolve this interest rate issue. But Milan, what do you think about this? How it affects you?
Well, many Republicans have actually left the party because nothing is happening over there. Everything is so difficult to move forward in any way because of the lack of functionality there, that many people have left the party.
Yes.
So that doesn't speak well. I think the only possible opponent to Trump would be Nikki Haley, but she's not doing as well as she might, although there's a little bit of time left for that to change. So still, as Winston Churchill said, that democracy is a terrible system, but it's still the best of all the systems available out there. And we do have democracy in the United States and in Canada. So it'll, in the long run, it'll work out. Everybody wants to be in the American dollar. That says something. Money goes where it's treated best, and money is just pouring into the American dollar. So
it's amazing. Yeah, they issue these bonds and they're bought. There's people lining up to buy them.
Yeah.
As we discussed it on our previous programs, there are estimated $6 trillion in money market funds, and they are waiting not
Where is it going to go?
To go into stocks, because once the interest rate will start lower, definitely the people will start moving money into stocks. However, there is a very interesting thing is that the economy on which the Republicans were trying to make a cornerstone of their campaign, that it's horrible, it's not going anywhere, the stock market is going down, everything is so bad. All of a sudden, the economy is doing fantastically well. Did you see the earnings just yesterday? Ford unveiled their earnings, and several other companies, and one is better than the other one. And so economy is booming. If it wouldn't be for Trump agenda to put it as a cornerstone, but he already understands that it's not going anywhere. So he now, actually, there is only one thing what he's clinging on for his campaign is the immigration and border. That's the only issue. It's a purely Republican issue, which has nothing to do with reality. People are crossing the border, but it was the same a year ago and 2 years ago and 10 years ago, by the way, too. So how does it affect an average U.S. Taxpayer? He has to worry about his job, which now he's in great shape. There are plenty of jobs around, and the wages are good, and the unemployment is very low. So what's that, and especially is that I understand the Democrats already agreed on most of the issues about immigration and so on, and agree to do it, and Republicans are now against doing anything, because that's the only issue left for Trump to build his election campaign. There's nothing else.
Well, there's a bipartisan agreement in the Senate, and the only thing that's standing in the way of passing it is the House, and the House is dominated by the MAGA hat Trump Republicans, and that's the problem. And so people have to vote those people out of office if they want to see any progress, because whether or not you agree with a particular policy the idea of not passing anything because maybe Biden gets credit for it or any president gets credit for it, that's the thing that's crippling our politics right now. People don't want to get someone else a win, but they lose sight that the win has to be for the American citizens. And the border crisis did get worse with the terrible situations in Venezuela, the terrible situations in some other countries. So we did get an influx of immigration, but basically we rely on immigrants to do the work that most American citizens won't do, start the businesses that most American citizens won't start. This is a country of immigrants, and this whole policy issue has to be decided with a humane solution. You can't put razor blades in the rivers and things like that to stop it. You have to be humane. And there was an agreement in the Senate. So what we have to focus on is the real problem right now is that Trump is still calling the shots in the House. And that's got to change if we want to see any progress in this country.
Immigrants actually built Canada and the United States.
Absolutely.
And about a half of the workers in agriculture, in California agriculture,
oh yeah, can't
without immigrants. Without illegal immigrants, California agriculture couldn't exist. The real threat to jobs is not immigrants, but it's artificial intelligence. Artificial intelligence can do so much that used to be done by human beings and do it
That's
better.
why record profits, because there's so much more productivity happening now, but it's coming at a cost, a human cost. So that's another topic entirely. But that's not what's crippling the government right now. Go ahead, Mark. You got a question?
I just had a quick question for Sasha and you and everybody. But I was seeing that there was an article earlier today in the Wall Street Journal, and there were a number of people, including one, and I don't know, the gentleman from North Carolina that was a truck driver, and they said that he earns about 20% more than he did 3 years ago. There was another lady, a nurse from Ohio, that won steady pay raises, built her retirement savings, and owned her own home. And there was a gentleman out of Nashville that owned a restaurant and is now about to open a second one and employs 50 people. But the gist of the article was that last one of those three people that I just described in the article feel that their long-term financial security is vulnerable to wide-ranging social and political threats. So even though they are supposedly doing well, they are feeling threatened by what they see as some uncertainty in the economy. So I was just wondering all of y'all's takes on that, because that's what I'm hearing even from acquaintances of mine and people that I'm seeing here in Durham, North Carolina. So there's like this uneasiness that, yeah, I'm doing well, but the other shoe is going to drop. That's
the thing that I've been reporting for a while now, is that when you do the polling on people and they say the economy is poor, but I'm doing well. Right. 70% of the people will say that the economy is poor. 70% of the people will say I'm doing well. So there's this disconnect. There's a lack of messaging, I think, from the Democratic Party about how successful the rebound from the COVID pandemic was. It's been more successful in the United States than it's been anywhere else in the world. And people are doing better. The problem that they see, and it hits them in their pocketbook, is that the prices have not come down, because the inflationary impact was dramatic for a while, but the inflation rate has come down to just about where the Fed target rate is. Fed target rate is around 2%. It's around 3%. These were based on all the quarterly reports of inflation that has been coming down in 2023. There's no reason it won't continue to come down in 2024. But we need the small businessmen to compete with these large corporations that are keeping the high prices, because they found out that people will pay them. So they have no incentive to lower them.
Absolutely correct. It's market economy, and they would not be prudent owners of their businesses if they would start lowering the prices while there is such demand on their services and goods. So,
unless there was competition.
If you don't charge what the market will bear, you shouldn't be in business.
Absolutely, yeah. You should be in charities. You should be elsewhere, and so on. Now, surprisingly, if you noticed, there are a lot of times on a network we have discussions about artificial intelligence and so on. always provide any comments on that because, first of all, very few people really understand what artificial intelligence is,
That's true.
what is impact now or in the near future or a distant future. And even there is some impact, of course, there is one in the near future and not so near future, distant future. What does it have to do with our discussions on a programs like this, for example? What does it do? What good does it do? Even if you invite expert, who Elon Musk or somebody else, so what is he going to say something what we haven't heard already? What is he going to say? That the job will be replaced? Okay, job will be replaced. Okay, that's and 75 cents will buy a cup of coffee. What else you want to tell us?
But Sasha, he might tell you to invest in some of those companies that are creating those robots and all along those lines, because I would think that that's something that he might tell you to do is to invest in the robotic companies that will be keep creating these robots that are going to replace the workers and all along those lines. So that's something.
Nine out of 10 of those companies will go bust. So
Mhm.
you don't buy the shares. Actually, I don't buy shares. I sell shares, or rather, the options, both puts and calls. But I'm selling on every 3 puts. I'm selling maybe 1 call. And mostly it's obviously puts. And by the way, speaking about puts, I have puts on Nvidia as usual. They are doing quite well. But I also initiated new positions for me, at least, on Alibaba. It's a Chinese internet company. It went all the way down, started to go a little bit higher, but it now went down about probably 10% or so on
Yeah.
earnings. So I thought that that's probably a pretty
Interesting.
good entry point to sell some puts. And I see that there is demand on their shares, and I'm watching like the trading in real time just to verify what is the feel, what is the breadth of the market for the shares. Very healthy.
Yeah,
I
with Alibaba, it went down 6.1%. I was just curious because I had read this before, because of their fiscal third quarter earnings, but they're announcing an increase in share buybacks.
Absolutely.
That's
And,
always
as I remember times when their shares were like 250 a share and higher. And so as I remember these times, of course, with all the China thing, all the shares went deep down all the way and so on. But I think they're consolidating now. And even I wouldn't be shy away from stocks like electric Chinese car making like a NIO, which used to be also 20, 25 shares a share. Now it's around $5 or $6 a share. But I wouldn't buy that one because the competition there is too great. And probably it's still probably good position to be involved, but on very small scale. And I think that Alibaba is much better bet.
And
Sasha Milan, just really quickly, do you think that it's a good investment? Because a friend of my mom's, who unfortunately passed away many years ago, was in the construction business, and he actually made quite a bit of money in the construction business. And I know that there have been some issues around housing in Canada, where you and Milan are, and building permits. But do you think it is a good investment to invest in housing, particularly as more people are trying to figure out this whole housing situation? So do you think that that is a good investment to get involved in the housing space?
Housing needs to be improved, unquestionably. You know, the average house today is twice as large as the house that we grew up in and had a happy childhood. And so the affordability isn't there. And partly it isn't there because the houses are much larger than they need to be. And the other thing about housing is the paperwork that is in place before the shovel hits the ground is enormous. By the time a house builder puts the shovel in the ground to start building a house, he's already half done, and the other half is all paperwork and codes and law regulations.
municipal regulations, right?
Yeah, and that can be simplified. So,
Yes.
is housing a good place to invest? It's difficult to say. You know that picking an area which might be good to invest will not guarantee that you're going to pick the right example. For example, and I mentioned this frequently, the place to be in at the end of the 19th century was automobiles. There were 2,000 automobile companies. By 2008, there were 3 left. And of the 3, 2 went bankrupt. Who could have picked Henry Ford as the automobile company to be in a growing area, which automobiles were at the end of the 19th century?
Hey, Milan, along those same lines, just like they couldn't pick Henry Ford, Ron Roadfox was the gentleman that created Construction Control Services. It's like one of those companies that does construction, not just here in the United States, but they did some in California where Jim is. They did it already in other parts of the world. I think they might have even done some in the Middle East and everything. But his daughter inherited that company, so she is running the company. So she has got the wealth that he had because he was in the millionaire class and all along those lines. So like I said, there is that generational wealth that I guess people can get if they go into the right business and are fortunate enough to inherit that business.
You know, when it comes to selecting the company that is going to do well, we should be looking at management. Mm-hmm. Good managers will take any operation forward successfully. And I often mention buggy whips, as an example of a terrible investment is buggy whips. But people do need buggy whips. There are people out there who are still driving horses and they need buggy whips. A well-made buggy whip, or someone who is managing buggy whip manufacturing well, will do well. Take that manager and put him in any other situation, say housing or whatever you like, he'll do well. We should be studying management more then.
Yeah, we're talking about talent. And the people that have talent will be successful wherever you put them, whether it's tomatoes or tomatoes. Yeah. It doesn't matter. But, to go back to what Mark originally asked about the AI field, I've been talking about semiconductors for a long time because I think of it as a matter of national security and national defense. And, so I've talked about Taiwan semiconductor manufacturer and NVIDIA. We've talked about a great deal. So now the idea of investing in AI, that's something that I've been looking around. But as we're talking, it's very difficult to figure out who's going to be the winners.
Oh, yeah. The ones with the good management will.
Right.
When it comes to semiconductors, let me ask you, Jim, does Moore's Law apply to semiconductors?
It has been. Speed has been the most important part of the semiconductor evolution. And, they were making them faster, basically right on sync with Moore's Law. Yeah. And so and that's actually, you could see that in chess. The computers that used to be heuristic based or slower chips, they were jokes as a program. Sasha and I could just laugh at them. But in the 90s, the speed of the chips increased so much that simply the depth of the numerical calculation made them so that I could buy a product off the shelf that could beat me. And so that was startling development, but it hasn't slowed down.
Here's what easily will beat you and me.
Yes, exactly. I have enough processing capacity now that we used to have mainframes in the 90s that didn't have this processing capacity.
Absolutely.
Here's something that we haven't been looking at, but perhaps we should. A rising market will increase all investments, garbage included. And so we ought to be looking at what the markets are going to do. And I recently heard about what's called the 10 a.m. rule, 10 o'clock in the morning rule. The markets open at 9:30. And what happens between 9:30 and 10, that half hour is what will happen for the rest of the day. So,
yes.
And so we ought to take a look. I'm going to study this 10 a.m. rule and follow it for a while to see how accurate it is, because if it's 80% accurate, that's something that we can't ignore. There's no way it's going to be 100% accurate. Nothing is. Nothing works all the time. But that 10 a.m. rule is worth checking out because, first of all, it's an easy thing to do. And if there has any validity, such as if it's 80% correct, we ought to be paying attention to that, because what the markets do is what all the securities will be doing, more or less. Very few securities go
Well,
back to the
you
market.
track the put call ratio as far as like what do you think the public thinks that the markets are going to do? What's it looking like now? Is it pessimistic, optimistic, somewhere in the region?
I haven't checked the put call ratio recently, and I can't do it now without having to get out.
Yeah. I understand. Sorry to put you on the spot.
Yeah, my view is it's quite useless information, and most likely it will harm you than help you at all, because it values of all people think about the direction of markets, and majority of people are always wrong. And
Yeah, I'm a contrarian for that reason. Yeah.
yeah, if you're a contrarian, it probably makes a lot of sense. Really, if most of the people think that market will go higher. Okay, here we are. You
Yeah,
don't.
they're going to go lower, right?
It's useful to me in that sense. I
Yeah,
like to know what everybody is thinking.
Absolutely. I totally agree with you, Jim, on that one.
Wait, Milan, we mentioned Moore's Law before. Could you tell us what that is? And probably better than I.
Moore was one of the founders of Intel Corporation, and he stated that the power of computers doubles every 18 months, and the price is cut in half every 18 months. And that has been true. And what I would like to know, Moore was, I think, an electrical engineer.
Mm-hmm.
All other electrical engineers could have probably stated that. What did Moore know 40, 50 years ago to state that law, which has been accurate right up to today and continues to be accurate? What did he know that made that possible? Well, that's Moore's Law. The price drops 50% in 18 months, while the power doubles.
I think he just basically saw the potential and that there was no reason why they couldn't achieve the potential of the chips, because the chip manufacturing is a relatively recent development in our history. You go back 50 years and it didn't dominate people's homes. Everyone has an iPhone now. Everyone has a computer of some sort. So all of these things weren't not everyone thought that was going to happen. It was pre-internet days and all of that kind of stuff. And so, to think back, like in the 70s, we, as a chess player playing correspondence chess, I didn't have computers to run evaluations. I didn't have databases to look up somebody's games, so what changed in the 80s was significant, but what really changed was in the 90s, when the speed of the processors became so fast and the processing power became so significant that it altered society.
Yeah.
Mm-hmm.
And so most of my stocks, really, I'm tracking technology, whether it's semiconductor manufacturing or whether it's AI. These are the types of things that I'm interested in. And I try not to avoid areas that I'm not interested in. And Mark was mentioning home sales, like, I looked into REITs, which is investing in real estate broadly. So it's diversification. And I wasn't very impressed with the returns and the promise of them, what they could deliver. So I haven't invested in anything to do with home development. But I just try to stay away from areas that I don't have any area of expertise in.
Computers have made it so that it's a better time to be alive than any other time in history. Computers have improved medicine and education.
Absolutely true.
And creativity, and you name it. Computers have a very major positive role in getting any of these
we couldn't do this show without it.
Yeah, that's right. So
I'll tell you that after very strong performance in the last 12 months, whereas I've generated 188% profit, I've started lately to protect these profits and see what else is there on the market. I started to do something what I don't recommend to nobody, including myself, to diversify. And with the diversification, obviously my profits are no longer the same as they used to be. Why? Because, for example, I sold a couple of puts on Boeing. Okay, so the Boeing had a big jump on earnings, and they have great orders coming in. But this is so stories that every idiot knows. There is nothing unique about it. Okay, then it had this stupid door went out in the flight, so now they have to figure out how to repair it. Okay, so now they figured out how to repair. So the stock
Sasha,
is now
Sasha,
moving higher. Yes,
who bought your puts from you?
most likely market maker. What else can I say?
Well, it could be a protective put for somebody who has Boeing, and he buys puts from you. And
That's fine.
drops, he'll make up the losses in the protected put.
How, in which way does it affect me? Why would I have to know whether my puts were bought
no,
by
of course.
market maker or by speculator?
Well, what motivates the buyer? Well, it's interesting to know what motivates the buyer. And you say market maker, possibly market maker.
To
Yeah.
me,
Yeah,
it's-
market makers do a lot of the
I
transactions.
can guess who it is, judging on a spread between bid and ask and the way how I was filled. I never put market orders. I always put a limited order. So if it's filled and quickly, that means that somebody, as Milan, you said, that somebody wants to protect his position on Boeing, most likely. Maybe a speculator. If it's not filled in about 10-15 minutes, then I know that I'm sitting against market makers and they, they will try to outseat me. Or the market will start moving in the right direction for me, so I will be filled anyway by the same market maker, simply because price.
We should probably say a few things about market makers. I think a lot of investors don't know what the role of the market maker is. And market makers really provide liquidity. A market maker would own a large amount of a very small number of stocks. And so when you place an order to buy, if nobody is selling, the market maker will take it from his own inventory and sell it to you so that the transaction is instant. So that sounds like a very noble place to be. However, market makers have easy access to insider information that most others don't. And some market makers have made 7-figure incomes in a month, something that would take a professional person 3, 4, 5 years to do. Market makers have done that and will continue to do that. And I'm not aware of any of them ever being punished for that. But that's what they do. So, this is one of the evils of Wall Street. We need Wall Street to execute our trades, but they're not our friend. And this is yet another example. I keep talking all the time about how Wall Street is not our friend, even though we need them. So we have rules-based investing, which is always correct, and judgment-based investing, which is wrong much of the time. Could be wrong as much as half the time.
The other thing Sasha talked about a little bit was, people covering their positions. With the now option trading is omnipresent, and so people often take positions and then try to hedge their bets. And also, when the stock starts to move up or down, people are caught and they scurry to cover their bets. And so I've seen that. And so sometimes the stock will go down lower than it should just because people are scrambling to cover their bets. And that's when I pay attention, especially with stocks going lower. Good companies that go lower because people are covering their bets, that's a buying opportunity to me.
Yeah,
well, it is a buying opportunity much of the time, but when you're dealing with individual companies, it could be
like an Enron. Yes,
that's right. So that's right. Yeah. So you have Enron and many others. Nortel, for example, in Canada, in Pennsylvania Central Railroad. There are lots of examples. But if you're talking about the entire market as a whole, then that works.
I also think that I like to tell the story, even if it's at my own expense. When I in the late 1990s, the .com bubble was about to burst. I could tell that it was about to burst. So I covered my positions by buying corporate corporate bonds. Not entirely, but I moved a lot of money away from the .coms that I had invested in into corporate bonds. One of them was Lehman Brothers. Lehman Brothers, I thought, was too big to fail, and that was safe. I wasn't safe. It all went under. It just collapsed. So even though I was taking what I thought was a conservative position, it turned out to be a bad bet.
Why
Jim,
is it-
have you seen the latest play, Lehman Brothers?
No, I have not.
It's fantastic play. I saw it in the summer from
Oh.
it was from London, and
Huh?
it was like in movie theaters here.
What's it called? What's it called?
The Lehman Brothers.
The Lehman Brothers.
And I saw just a few weeks ago, 3-4 weeks ago, I saw it in Toronto, the actual play, which
Uh-huh.
was fantastic. It was so well done. And there is very interesting episode when it was the Great Depression. They start their history since they moved from Germany in the mid 800s. All family moved from Germany. It was a well-known Jewish, very prosperous family in Bavaria, and they moved to United States and prosperous here and so on. And very interesting when there was a crash of 1920 to 1929 and on.
Yeah.
And they
The Great Depression.
to other Great Depression. They talked to other investment banks, and they came to the conclusion that it does not make sense to help any of the banks, investment banks, which are going under. Let them just go under. And then whoever will stay will be able to build as a new economic system and be prosperous and so on. And so the same thing happened to Lehman
Yeah,
Brothers.
but too big.
2008, when decision was not to help them, let them go down. And they were the first and the biggest one that went down all the way. See this play. It's really, really, I highly recommend that.
Well, it certainly sounds interesting, Sasha, but too big to fail. All the other banks, many other banks were bailed out. Why did they let Lehman Brothers fail while they bailed out other banks?
That's true.
It's a good.
What they did.
I think they were the first one of the really big investment banks. They were first one on the line to be in desperate situation. And, remember that at that time, all the founders of Lehman Brothers, they were already all dead.
Yeah.
So it was basically the managers who run the company and so on. And
Right.
they didn't have the cloud that Goldman Sachs or JP Morgan or others, they
That's
just
correct.
didn't have that. And okay, so Lehman Brothers, so what's your story? Okay, you're going under? Okay, so go under, and some others will remain in business and will pick up your clients and your assets and everything else what you have. So that's really all what happened to it. I don't believe that by 2008 Lehman Brothers were equals to Goldman Sachs and JP Morgan and many other.
No, they were a tier below. I would say.
Absolutely. Yeah, and that's why they allowed to go under. And in fact, nothing.
They weren't big enough.
They were not big enough. They were big, but not big enough.
But even though the company folded, the individuals who owned it walked away wealthy, didn't they?
I have no idea, and neither I care.
Almost certainly, though.
Yeah.
Well, it depends.
Money
It
else.
depends. But
We
you know,
don't
they
know how
were compensated, in other ways. So that
we don't know how their deals were structured.
That's true. We
Whether
don't.
they had, maybe they had all their equity
Eggs in one basket. Yeah.
their stocks, as very often happen. So we don't know that, and there was nobody in the management of well-known stature that we would care one way or another. It just goodbye, baby. It's
Yeah.
it's a tragedy, but the world still can go on. So listen, I hope that the interest rate will come down. They will, but it all remains to be seen when. Canada keeps the same interest rates for now, but ready to start going down on interest rates anytime soon. Hopefully, it will be sooner or later. But again, that Canada doesn't affect anybody, even Canadians, because for some reason I believe that most Canadians have their assets in U.S. stocks. But maybe I'm
True.
You know, Sasha, the one thing about our society, our American society, is that you know, you can't put any pressure on the Fed.
no.
We have the ability to call our Congress people, and you know, theoretically they will listen to us. But you know, there's nothing to say. You know, let's call Chairman Powell and put pressure on him to lower interest rates. So
No.
they're free to do what they want to do, exercise their best judgment, and whether they're politically influenced or not. You know, I suspect they are, and I think you suspect that they are.
I do. Yes, I do. I think they're self-serving.
Yes, yeah.
Mm,
People who control the money control the political process.
yeah, they do. The only thing is, they supposedly are independent body
Yeah, that's the
to
theory.
regulate the economy. Now, whether how they're independent, it's like the Supreme Court. Is it independent body? Is it the third
Not anymore.
of the United States?
Supposed to be,
No, don't even think about that. So, listen, we live in a real world. We have to protect our investments the best way we can.
Well, I'd like to say a few words about bankruptcy. We have to protect our investment. In Switzerland, if you go bankrupt, you go to jail. And you go to jail proportional to the amount of the bankruptcy that you're involved in. So nobody in Switzerland is going to take a chance. People have forgotten that Henry Ford went bankrupt 5 times.
Yeah.
And many
Trump's
others.
working on his 7th.
You're allowed to make a mistake and learn from it and continue. And what has Switzerland produced? Somebody said the cuckoo clock. Because why would you take a chance and risk going to jail, because all new initiatives and companies are risky. Why would you do that in Switzerland when you can do very well without taking chances? So the American system, the Western European system, where we're allowed to go bankrupt and start again, works.
Yes, and although some people exploit it, and
Well,
I would put Donald Trump as the prime
yeah.
example. You know, he doesn't pay his workers, and then you know, there's lawsuits back and forth, and you know, he gets to declare bankruptcy and wash it all away and pay a minimum of what he owed, and then he does it again and again and again.
And they drive up to the courthouse in the Rolls Royce and they say, "Sorry, boys, I'm bankrupt."
I'm bankrupt. Still owns his golf courses, and still, yeah.
There are consequences why the Swiss banks are so healthy and so rich, because without bankruptcy they collect 100 cents on a dollar from the loans that they're making. In the United States, even if you for 1,000 customers, you have one who is going bankrupt. Never mind 2, 3, or more. How about 25? It affects the loans what the others are paying, and they have to pay more restrictive terms and higher interest rates or so on. So there is nothing really that, okay, so this guy went bankrupt. That's no problem. Okay, let's move forward. Do you know that each bank, if only 2% of depositors will ask for their money, the bank will collapse instantly. Okay, because no one is keeping 2% cash as the reserves. All cash of the banks, it's all working. So if depositors will, one day, all of them will demand, we need our money back now. So that's the end of the bank.
There are no reserve requirements.
There are, but
they're much more lenient with this. And but never happens that all depositors in the same day will ask for their money back. That never happens, because if it will, no single bank can withstand that and pay everybody. It's just not in card. Now, most of the deposits are secured by different agencies. So most people, of course, if you keep $1 million in a bank and 250,000 is secured, then your $750,000 is goodbye. You will get only 250. But if all your deposits are 250, then you will get all your money. Absolutely. Well, with that, I wish you great trading week ahead of us. And thank you very much for today's program.
Thank you, Sasha. Thank
Thank
you,
you.
Milan.
Delighted to be here.
All the best, everybody. Bye bye.
Bye bye.